Hey everybody, today's July 12th, 2022. We've got a couple topics for you today. We're going to talk about interest rates, the consumer confidence that we're seeing, what's happening with prices on a national and a metro level, and what's going on with the inventory situation. I'm Vuk.
Hutan.
We are professional engineers turned real estate investors, and now we focus on working with our clients to solve real estate problems and grow wealth together. So, Hutan, kick us off. What's going on?
All right, so we're going to talk about the interest rate hike. Today is July 12th, 2022. Tomorrow, July 13th, is going to be Bank of Canada's meeting. Most likely, based on what we're hearing, they're going to increase their rate in overnight lending rate by 0.75%, which is going to take it to 2.25. Currently, it's at 1.5. Now it's going to be 2.25. It's pretty unprecedented, the rate of speed, the speed that they're going and rating this interest rate. They're hiking the interest rate. We don't know how much more they're going to go. Possibly they may go another 0.75. We don't know, but we're seeing sign of crack in the system. So yeah, that's it. So most likely 0.75. Yeah. And
which makes the prime rate what, like roughly
which is currently
4.5?
Bank of Canada. Most of the banks, major banks, prime rate is 3.7
today.
So today,
yeah.
So when you add 0.75, you're looking at about 4.35. Right?
4.45.
4.45.
Yeah,
so
almost 4.5.
4.5. Exactly.
Yeah.
So it's pretty significant, given that a lot of people's mortgages are like $700, $800, $900 million.
Yeah. And I think what the other important thing to note with the level that we're at now is that it's actually changing the qualification rate.
Exactly.
That stress test rate. So now people that might have been pre-qualified before are having to go back and get re-qualified and slightly dropping them down, and that's going to have a direct impact on.
It's making a big impact. We're already seeing prices are coming down significantly month over month. We're still up year over year, but definitely this is going to be the last straw that is going to push the prices most likely come down. We don't know, but that is what we anticipate.
Into negative territory. Yeah, I mean, that leads us into the consumer confidence. Consumer confidence has shot straight down, which you could look at as possibly a positive sign, because the whole point of increasing these interest rates was to slow consumer demand. And so if consumer confidence is down, that might help slow that demand, and it might break that inflation trend from being upward to kind of curving back down. And if that starts to happen and carries some weight moving forward, maybe things maybe the Bank of Canada kind of says, all right, we've achieved that short-term goal.
Because the consumer confidence, now everyone expected high inflation, everyone just went and bought something because they thought everything is going to be expensive. Now that indicator, consumer confidence, that's going down, that means that people are anticipating recession, slowdown, downturn.
Exactly.
So that's what's kind of changing the narrative, right?
Exactly.
We'll see. So national home prices versus metro home prices. So why are we going to talk about this? Because a lot of people come and say, well, doesn't Bank of Canada see that prices have dropped 30% month over month in Ontario? As a matter of fact, the federal government, Bank of Canada, they look at the national home prices, not Ontario or BC's home prices. Ontario and BC was the frothiest market, and ever since the interest rate hike, those were coming down. Those metro home prices were coming down significantly, but areas like Alberta, Saskatchewan, or like Prince Edward Island, those prices are actually still keeping up pretty good, and their year over year prices are coming up. So that's why we see some areas of Canada prices are coming up, some areas in Canada such as Ontario and BC is coming down, and overall if you look at the national home prices, you may not see exactly what's happening, and that's what the policymakers are looking at. They're looking at national home prices and they're saying, no, we haven't seen a serious drop, and that's why they're still going on with this whole interest rate hike, right? So that's just something that we wanted to point out, right? That we're seeing mainly in the two coasts, Ontario and BC, where we're seeing prices are dropping. Still in the central Canada, prices are still going up, or because they didn't go up as much before, right? So that's why now they're not coming down as fast.
So essentially what we're saying is, the national home prices are kind of undervaluing the real drops that we've seen in the more populated, provinces. And so I think this will start to catch, as these prices continue to trend down, it'll start to reflect in the national price.
Yeah.
Because you've got more properties selling at larger discounts. And then eventually that might kind of, it might fall, timing-wise, it might fall really closely with the next rate hike.
Yes.
Where we see maybe the peak inflation. And then talking about the inventory situation, however, I personally feel like we might be seeing some signals of like bottoming in certain areas, because if consumer confidence is down, but inventory hasn't shot up, and if we actually bring up the charts, you'll see that our inventory levels today are pretty much average if you take the last 6 or 7 years. And that also accounts for seasonality. So it's not like people are running for the gates and like dumping their properties. And that, to me, suggests that this might be something that we're going to be monitoring a lot more closely moving forward. But as we get through this next interest rate hike and these inventory levels stay about where they are, the demand has been crushed. I think we can say that very confidently. That's reflected in here. And now if inventory starts to kind of level off, then we'll start to kind of see, okay, how do sellers react to these prices? Do they start taking listings off the market, or do they start really dropping and lowering the prices? And I mean, nobody really knows. But
the inventory numbers have gone up month over month and even yearly. But again, like by looking at the chart that we're going to put on the screen, you can see that we're still below the average, right? So we're still not like that much inventory is out in the market. And that's why maybe, as Luke mentioned, there's a lot of things prices haven't came down as much. We'll see.
But the inventory increase is a seasonal trend.
Yeah, exactly.
So
it's summertime.
It's not different than any other year that we've seen.
Yeah. So one thing, I posted a story before the video, and I asked people if they had any questions, right? So one person asked, what do you think banks gonna do, right? Like, cause you think about it, like as demands are getting destroyed, banks are losing businesses, right? The mortgage applications came down, refinance came down. What do you think is gonna happen? You think they're gonna tighten even more and not lend, or they're gonna ease? Right, that's the question that one of our followers asked.
They might change the rules. They might bring back the 40-year amortization.
That's it, right? So that's one thing. One thing they could do is just change the qualifying, or change the amortization, which is gonna like bring down the payments. And I mean, I think in UK they have like a 40-year amortization, right? A lot of places in Europe.
We had 40 years, like what, 10 years ago?
Even right now in multifamily sector, like a CMHC loans, they have 40-year amortization. So it's there. Banks can do it, but obviously it's got to be like a policy decision, right? Guys, like just remember, like banks are in the business of lending money. I mean, there was this whole talks of OFSI, which is like the mortgage regulator branch of the government. Everyone was saying, oh, they're gonna come down hard on investors. They're not gonna allow investors to use home equity line of credit. They're gonna push the interest, the down payment for investment property from 20 to 35. They had a meeting, I think, like 2-3 weeks ago. They didn't do any of them, right? So I think the housing is a very sensitive subject for Canadian government, because a lot of their budget is tied to the housing sector. It's not just like the real estate commission or land transfer tax. It's the construction industry. It's like all these other smaller industries that are connected to the housing. And I don't know but that's what they're going to look at. They're going to look at national home prices. Once they see that that's going down month over month and year over year, then I'm pretty sure they're going to start talking about what to do to mitigate it, right?
Sure. Well, the funny thing is, I mean, to me, it's interesting that it hasn't yet shown up, because this, from a volume weight average perspective, is greater than Calgary
100%.
or PI. So how is it not showing up in those in these? Is there some funny business in the accounting? You know what I mean? Like, how are they calculating the home price index?
Yeah.
Oh, it's because the home price index doesn't take in outlier properties. That's what it is. So
I think, yeah. I mean, this is an interesting topic, and that's why you cannot, like us, as we're like managing or like reviewing the reports or talking and making contents. We're not gonna just focus on this on like our specific area, even though real estate is a hyper local. But we have to look at national home prices because policymakers look at this number. They don't look at Ontario.
Yeah.
They look at Canada as a whole. So that's why it's important to monitor that number as well.
Yeah.
Which right now they're not in panic mode. We'll see.
I guess you got to know that so you can front run their decision.
Exactly. Right. So.
Yeah, one last thing that I think is worth mentioning, as these prices start to drift lower and lower and lower, and we see rent prices start to climb relatively significantly, it starts to bring back the cash flowing properties. It starts to make properties more valuable as an investment for investors. And those investors might be the ones that actually bring us out of the bottom. Because investors are usually more sophisticated because they've done it more. They're more comfortable taking those decisions in tougher market conditions. And when we see investors start to step back in and buy these properties because, hey, look, they can put it back on the market and they can cash flow or be relatively neutral, then I think that's going to lead to buyer sentiment returning. And then you're going to see, again, home buyers saying, oh, look, the market's back up. Now is the time to buy, because everybody always kind of does what everybody else does. But if you want to get ahead in life, you do the opposite.
Yeah.
So keep that in mind.
That's what it is. Yeah, exactly. All right. Thank you for watching.
Cool.
We'll try to keep putting these videos out on a consistent basis. And as we learn more about this current market environment, we'll share our thoughts and our findings. And yeah, I hope you find value in these.
If you have any other suggestions, let us know and we can bring those topics up.
All right.
See you.